protecting Main Street from Wall Street. It's time for Money Unleashed with Eric Johnson and Kyle Allyn.
You have to have a plan where you know if the market's going to go up, what happens next. And you also have to have a plan where if it doesn't go the way you think, you know what you're going to do.
It's time to put you back in control of your money.
I'm not trying to predict the weather, which is kind of what we're talking about, right? It's predicting the stock market. I'm trying to build a better boat.
This is Money Unleashed with Eric Johnson and Kyle Allyn.
Welcome to Money Unleashed. I'm Eric Johnson. Joining me as always is Mr. Kyle Allyn. We are the vice presidents of Hoffman Financial Group, proud partners of the Georgia Bulldogs. Go Dogs. We talk about finance every weekend and how it relates to you, your future retirement, and your financial well-being. We got a lot to talk about, man. Congratulations. The election's over. We have a new old president.
I'm just excited that we don't have to deal with those text messages anymore.
Or the commercials.
Woo.
Oh my goodness. I was getting like 20 a day.
Yeah, I don't care how you voted or how you see this. It's nice to be past it, right?
Yeah, well, my phone's much quieter now. It's
your 400 friends that called you from all different places to get you to vote are no longer pestering you.
Yeah, I know. They're not my friends anymore. It's really weird. But it's nice to know that the election's over. I know the market's been waiting for it. We've been waiting for it. We've been talking about it ad nauseum. But we're going to touch on that a little bit and how it affects your money, how it affects your retirement, and what you need to do to position yourself properly in the future. Obviously, a huge week. Let's hop into it, Kyle. So, do elections matter when it involves your portfolio in the stock market? What are your thoughts?
Well, let's look at some data, right? Since Jimmy Carter, we've had 6 Democrats, we've had 6 Republicans come into office. We've had 10 good terms and 2 bad terms. So the 2 bad terms were during the Bush administration. You could make a good argument that what happened during the Bush administration was started many years before him. So, I would argue that there's a lot going on as far as morality and culture and a lot of policy outside of economics. But when it comes to economics, the data seems to say that the market is bigger than any one politician. I mean, the market itself is $57 trillion. So I wouldn't go as far as saying elections don't matter, but I would go as far as saying if you're running your portfolio based on who becomes the president, that's just not good, sound, fundamental economic thought.
Right. Yeah, we talk about this all the time. We don't care who you vote for. Red team, blue team. We're always focused on the green team. We're the business guys, and we're just talking about business because you've got to take care of the economy of the 4 walls of your house. And you and I always talked about this. We've mentioned this in previous shows. Messing around with your portfolio specifically because of elections is not usually a wise move. And it's a couple different reasons why. The stock market is a random walk, and it's got market forces that even you and I don't even know about, which, move the prices of things. But also, you want to stay invested. We've run reports before that, if you miss the top 5 days of when markets move, it's a drastic drawdown on what you could be doing in your portfolio. So it's really important now more than ever to take a look at what you have and make sure that you're making the proper adjustments to move on with what just happened, right? Because the beat goes on.
And I empathize with it, right? Because we just joked about the text messages and all the political things coming at you. It's so overwhelming. I think you and I forget the advantage that we have coming in here every day and looking at the data, right? There are 21 economic factors that you can follow, things like GDP and CPI. And so we have an advantage. We see what's going on, whereas the public is getting up, going to work, taking care of their kids, saving their money, and then when they go to invest, they turn on their TV and they see something that says the world's ending, and it could be on either team, either side.
Yep.
I think I just want to reiterate, and we've talked about this on the show before, if you looked at an investment of $10,000 from the 1920s forward, Democrats like to point out that there would be $1 million there if they had the ball and you were investing only when they had the ball, and Republicans get a little bit of criticism and says, okay, if you invested only when Republicans were in office, you would have about $300,000. But to your point, if you just stayed invested, you would have $38 million.
Right.
So I think it's very important to constantly remind people you need to build a portfolio that can survive all the different things that we go through. You're going to have Democrats and Republicans along the way. You're not going to be invested for 4 years. You're going to be invested for the next 30. So let's build something that can weather all storms, whether it's the blue team or the red team. Let's build a green team that can survive, thrive, and be successful.
That's true. And here's the thing, everybody out there, is the only way to actually build this portfolio that Kyle and I are talking about is to actually look at the current one you have. And that's what we do for clients every single day. We refer to it as a portfolio x-ray. So what is a portfolio x-ray? What it is we are analyzing what you're invested in, and we back it up with a couple of reports. We do a Morningstar report, and we also have a quantitative analysis. And we go over that with you at no cost to make sure you know what's exactly in your portfolio. And if there's a way that we can benefit you financially, we will meet with you again, also at no cost, and give you the recommendation that we would do if we were going to help grow your wealth. And the only way to do that is to give us a call, 404-341-6767. That's 404-341-6767. Or you can go online at unleashyourmoney.com, see the whole team on our website, and click the button Portfolio X-Ray. One of our fantastic client service representatives will give you a call, and you could sit with one of our great advisors. It could be me or Kyle, but it's super important to get this done. Because if you don't know where you are on the map of retirement, you've got no way to know where you need to go, right? And you want to make sure that you're ready for what's coming economically for our country, whether you like it or not. You got to take care of your money. So this is super important. I would urge everybody out there, if you haven't done this yet, to give it a shot, because it's the only way you're going to get better in life is by measuring things. All right, so we're past elections, so now it's policy time, because that's what happens. Everyone's put their vote in. We understand what's about to happen. So let's talk about the debt and interest expense and what's coming down the pike. I know you did a little bit of research on this last night, Kyle. What'd you come up with?
Yeah, so as of July of 24, the deficit itself, the interest expense on the debt, cost about $956 billion to maintain, which is 17% of the total federal spending in fiscal year 2024. So, one of the things we're starting to look at, and one of the things we've got to talk about, is the responsibility of paying your bills.
Yes.
For many generations, we've been kicking this deficit forward, and so we're dealing with the reality that at some point we're going to have to clear some of this. At some point we're going to have to pay some of this off. And so I think one of the things to be aware of is if you're someone who's really excited right now and you say, hey, I got my guy into the office, well, he's got a real job to do, and whether or not Donald Trump can get this done is something that he's going to have to work on. And so I would argue one of the biggest projects that he's got to tackle is this idea of deficit spending. We know that there's massive deficits that we're running. We know that some of the policies are not good for that. So Donald Trump talks about tariffs. I think he's smart enough as a businessman to use them as a leverage tool, but tariffs are taxes. So that would put us in a position where ultimately we are putting a deficit in a place that's not good. The other tricky part is if you start cutting taxes, you're reducing the inflow of dollars coming to the government.
Right.
Now, of course, conservative thought is by doing so, you increase revenue, you increase growth. We
Consumer spending.
Exactly. Yep. But the point is, no matter where you land on that thought, we're going to have to deal with the deficit. So if there are constraints, if there are discussions of changes, are you ready for that, right? Is your portfolio positioned to take advantage of that? Is your retirement plan in a position to take advantage of that or survive that? I mean, what if one of the answers comes back and says we're going to put means testing on Medicare? What if the answers comes back and says, hey, whether we like it or not, we can't extend the tax cuts? So we'll talk about those in a little bit. But the point is, you've got to build a portfolio not only to navigate market volatility, you've also got to build a portfolio that navigates all the different risk factors, right? There's lots of them. You've got interest rate risk. You've got credit risk. We saw in 22, you might have been protected from market risk, but when they changed the bonds, you weren't protected from interest rate risk.
Yep, that's right.
Yeah, so what are you looking at? And so back to your point, not only does the portfolio X-ray tell us what happens when things are good, it gives us some clarity on the different types of risk in your portfolio.
One of the very interesting bits of the quantitative analysis that I love going over with people is, so what happens is they take all of the positions that we analyze for folks who come in and give us their time, and it runs it through what's known as a Monte Carlo simulation. And so it runs it 1,000 different times through the hopper, and it comes up with these scenarios of what would happen if 2008 happened again? What would happen if coronavirus happened again? What would happen if the China slowdown happened again? And it gives us a really good idea on how your portfolio currently would operate in those types of situations, right? So you have to prepare for these things by understanding how your portfolio works, and that's part of the analysis. Now, we talk about setting up a proper portfolio, Kyle. I want to pick your brain on this a little bit, because nobody gets the same recommendation here. We make a la carte plans for people. It's based upon families' wishes, wants, and needs. What are some of the ways that we get around those extra risks that we were talking about?
Wow, great question. I don't think you can get around them. I heard this once that said, when a storm comes, the bison runs towards it. So I don't think you can get around them. I think you've got to face them head on, and you've got to talk about them. So, one of the things we do with clients is we have real discussions about those risks to be able to understand how they feel. There are some clients that they could lose 30, 40% in their portfolio and just ignore it.
Yeah.
There are others that when the market goes down 15%, which is hyper possible in any given year, they're going to freak out and go to cash. So I think it's facing into the storm. It's facing into the things that you don't want to think about. Look, you get to have fun when you come in front of me. We're going to have a real conversation. I joke sometimes, and this doesn't sound super pleasant, so stick with me.
Okay.
That being a fiduciary is the license to offend.
Yes, it's true.
Right? Like I've got to say, hey, hold on, we probably shouldn't have done that thing. Hey, hold on, that didn't make a lot of sense. Now, it's your money, it's your life. I'm not going to tell you what to do, but almost like the bumper rails in bowling, I'm going to try to help you keep that ball moving forward. So I think you've got to face into those risks, and you've got to have honest conversations, at least with me and maybe with your spouse, about how you would feel if they happened. That way we can plan for that going forward. So that's me.
Okay.
Well, I'm going to toss it right back to you.
Oh, we're playing tennis. Let's go.
Yeah. Question with a question. So let's go.
Okay. So I agree with you. You have to lean into it. And yes, it's not our job to give you sunshine lollipops all day. It's our job to tell you what's actually so. It's like going to a doctor, man. If you come in and you're like, hey, my ankle hurts and it's really your elbow, we can't help you. So it's having those tough conversations and leading into the tax situation, leaning into the risk situation, leading into where do I need to get to over the next 5 years in order to accomplish the proper income plan for my family. And there's a lot of different ways that we do that, right? I mean, so you mentioned in 2022 the fact that interest rates started fluctuating in bonds, people lost money. We've got a litany of different ways that we can help save and protect your money, but also make more than a stick of bubble gum. Incidentally, everybody out there, even with a 0.5-point interest rate cut, bond funds are still down. So you've got to find something that's going to protect your money and also take advantage of the market forces so you can actually make some. And I'm going to let you behind the curtain real quick. When your defensive money actually makes money, that is the keys to the castle. You expect your aggressive money to actually grow. I mean, that's the purpose of that money. No one ever really looks at their defensive money and says, oh, you know what? I expect that to grow too. But if you can accomplish both of those goals in a growth portfolio, man, it's like rising tides lifts all ships. And then if you have active management, which is what we do at Hoffman Financial Group, we want to meet with our clients at least 3 to 4 times a year if we can get away with it. I like to see your eyeballs. We can do a Zoom. We can do a phone call. But when you're actively managing these portfolios and your defensive money is actually hitting the ball for you, the results are astronomical. So it's just about making sure that you've got the proper investments that are going to reflect what your family needs. And that's what we do when we sit down with people. So if this sounds like you, give us a call. We're happy to help you. 404-341-6767. That's 404-341-6767. You can also check us out online on unleashyourmoney.com.
Eric Johnson and Kyle Allyn are investment advisor representatives of Brookstone Wealth Advisors, LLC, a registered investment advisor and affiliate of Brookstone Capital Management, LLC. BWA and Hoffman Financial Group are affiliated under common ownership. Registered investment advisors and investment advisor representatives act as fiduciaries for all of our investment management clients. We have an obligation to act in the best interest of our clients and to make full disclosures of any conflicts of interest. Please refer to our firm brochure, the ADV 2A, page 4, for additional information. The Hoffman Financial Group and WSB are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with a professional specializing in the field of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Any client experiences discussed during the show are unique to that client. They are not meant to imply or suggest you will experience the same results. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested. Any comments regarding safe and secure products and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Fixed insurance and annuity product guarantees are subject to the claims paying ability of the issuing company and are not offered by Brookstone. Index or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract. Please refer to our firm brochure, the ADV 2A Item 4, for additional information. Hoffman Financial Group is not affiliated with or endorsed by the Social Security Administration or any other government agency. Insurance licensed in Georgia, number 163546.